greetings to you again, each and every one of you. Welcome to East African Community Monetary Affairs Governors Meeting, first time to be held here in South Sudan, Juba. I'm Chan Andrea from the Bank of South Sudan, the MC for this event. Let's start with a word prayer. Our brother here, Chance Maniko, will lead us through. So Chance, please take us through.
Let's pray. Heavenly Father, we want to thank you this morning for this wonderful opportunity you've given us, Lord, to come together and meet in Juba here for this important meeting. That is the Monetary Affairs Committee and the governors who are sharing with us this morning. How I pray this morning, Father, for the inspiration of the Holy Spirit, that you may inspire each and every one of us this day, Lord. And that even as we stay and go through the program, Father, your blessings will be abundant and evident in our lives. We thank you for the governors, we thank you for the participants, and all who are here this morning, Father, in this meeting. We want to pray for our region that, God, you will indeed bring prosperity to all our central banks in the region here, Father, that in the end of it all we shall give you thanks and praise and glory for your goodness in our lives. Thank you because you have heard this prayer, for it's in Jesus' mighty name I have prayed. Amen.
Thank you, Chance, for these beautiful words. Ladies and gentlemen, distinguished guests, let's stand up as we listen to the national anthems of the Republic of South Sudan and the EAC.
Give me
Thank you very much. Be seated, please. Have a seat. As we proceed to the next agenda, which is the adoption of the agenda and the program, Honorable Chairperson, we have a program here, the line-up of the programs for adoptions, and also our agenda. So you can lead us through. Let's see the agenda and the program for the adoption by the chairperson. Okay, I believe each and every one of us has the program and agenda in front of you. Let's proceed to the next agenda. Please join me in welcoming Dr. James Halich Garang, Governor of Bank of South Sudan, to deliver his opening remarks. You're welcome, sir.
Thank you, MC, for the kind introduction. And let me begin by welcoming all the fellow delegates and governors to these important functions held today in Juba. Dr. Kamau Thuge, Governor, Central Bank of Kenya, Mr. Edward Noman, Governor, Bank of the Republic of Burundi, Mr. Emmanuel Tutuba, Governor, Bank of Tanzania, Dr. Thierry Kalisa, representing National Bank of Rwanda, Dr. Adam Mugume, representing Bank of Uganda, Ms. Annette Mutawe, Deputy Secretary General, EAC, Mr. Sebastian Acevedo, IMF Country Representative to the United Republic of Tanzania. Distinguished participants, ladies and gentlemen, good morning. It is an honor to host the 27th Ordinary Meeting of the Monetary Affairs Committee for the first time in the Republic of South Sudan. Let me also take this opportunity to convey to you that the President of the Republic and the Chair of the EAC, His Excellency Salva Kiir Mayardit, and our loving people of South Sudan welcome you to Juba and wish you all fruitful discussions this morning and deliberation. Fellow governors, MAC meeting is an event where we gather to take stock of governance decisions and evaluate progress that has been made for the last 1 year, while discussing monetary affairs and other pertinent issues that matter to our community. In this context, MAC meetings accord us the opportunity to examine progress and envisage efforts geared towards achieving the objectives of the East Africa Monetary Union, or the attainment of the single currency. Honorable governors, distinguished delegates, ladies and gentlemen, let me also take this opportunity on behalf of the Bank of South Sudan and on behalf of the South Sudan as a whole to appreciate our respective delegates who are seated here and who deliberated in the last few days and reviewed the macroeconomic developments for the region. They rightly focus on growth prospects, inflation dynamics, and exchange rate stability, while underlining the need for coordination and synchronized approach to monetary policy in the region, with implications to promote price stability and ensure sustainable economic development for our region. Undoubtedly, fellow delegates, several issues top our regional and global agenda today, and there are so many. These include a realization that our planet faces unprecedented existential threat, that poverty is on the rise almost everywhere, and that geo-economic fragmentation is on the upswing. Before the dust of post-COVID-19 pandemic era settle, new threats have emerged, emanating both from negative humankind activity and other natural calamities. It goes without saying that effects of climate change, including, for example, floods and droughts, and geopolitical conflicts, for instance, pose significant risk and challenge to the conduct of monetary policy across the globe. Notwithstanding the above challenges, there is some light at the end of the tunnel. International Monetary Fund, in its April work, projected a modest global growth at 3.1% in 2024 and 3.2% in 2025, with 2024 forecast of 0.2 percentage point higher than in October 2023, while economic outlook on account of greater than expected resilience in the United States and several emerging markets and developing economies, as well as fiscal support or stimulus in China. Global headline inflation is expected to fall to 5.8% in 2024 and to 4.4% in 2025, with the 2025 forecast revised downwards. In emerging markets and developing economies, growth is also expected to hover around 4.1% in 2024 and 4.2% in 2025. Honorable governors, distinguished delegates, ladies and gentlemen, for the Republic of South Sudan, the macroeconomic outlook appears promising, with the gross domestic product projected to grow by 4% in 2024. Inflation has been modestly subdued, though it remains volatile. Inflation consistently declined from double digits from 50.8% in 2020 to a single digit of 5% in 2023. This optimistic forecast is broadly attributed to the improved trade balance supported by satisfactory performance of the oil sector, as crude oil makes up substantial portion of South Sudan export. Especially, this was the case, especially before the disruption of oil production early in the beginning of the year. Fellow delegates, we have also engaged as a country key international financial institutions to support our homegrown reform agenda. Through deepening our bilateral engagement with IMF under the Rapid Credit Facility and through a 9-month staff monitored program and under a program monitoring with board involvement, South Sudan has implemented a series of macroeconomic reforms that have yielded positive results on the exchange rate and inflation. Despite this positive outlook for South Sudan, a number of risks, however, continue to stem from both internal and external dimensions, and they are high. At home, the stakes are a bit higher as the country prepares to conduct its first democratic general election by December this year. Externally, geopolitical tensions, including, for instance, the conflict in Sudan, has affected our pipeline to Port Sudan, and the conflict that is also raging between Hamas and Israel has also disrupted the major trading route in the Gulf of Eden, where the shipment of our crude oil take place, posing a challenge to South Sudan's economic outlook. As a result of the above challenges, including the conflict in the neighboring countries, our reserves are at historically low level. This have huge implications for balance of payment, with a negative consequence for currency depreciation and volatility manifested in prices of goods and services. Fellow delegates, we hasten to add that South Sudan is a net importer, which creates unprecedented pressure on the external sector and trade balance. Honorable governors, distinguished delegates, ladies and gentlemen, the initial date for attainment of the East African Monetary Union ran behind schedule, a recognition that obliged governors to push it to 2031. Considering the presentation made by partner state delegates during the technical meetings of the senior officials, it is obvious that partner states are at different stages of attaining the key macroeconomic indicators. There is no denying that South Sudan is lagging behind to achieve key macroeconomic indicators. This is in some areas. There are few areas where we have made progress. The country, however, remains committed to exert more efforts toward implementing the MAC roadmap to realize the monetary union by the indicated timeline of 2031. On convergence criteria, South Sudan recorded inflation rate is slightly above the 8% convergence criteria. Our inflation fluctuates and recorded 5% in 2021, negative 11% in 2022, and 13.2% in 2023, respectively. We remain hopeful to bring inflation under control while transitioning to a price-based monetary policy framework. Further, our debt to GDP ratio is within the 50% target set by the EAC. Dear governors, fellow delegates, considering the above and other geopolitical tension and the resultant blockade in the Red Sea, crude oil export continue to be jeopardized. And this is the key source of export for South Sudan. And that has implications, as I said earlier, for our reserve. That being said, we remain committed to rebuilding our international reserves to meet the EAC convergence criteria of 4.5 months of import cover. Honorable governors, distinguished delegates, ladies and gentlemen, the Bank of South Sudan remains indebted to many central banks seated here in the hall today for their open door policy and enhanced cooperation. This approach has enabled us as the bank and as a people to gain immensely from technical assistance delivered by regional experts over the years. In this connection, I would like to recognize the Bank of Uganda and the Central Bank of Kenya for the recent TA provided to us in the areas of development, in the areas of market development, and transitioning to a price-based monetary policy framework. We also would like to recognize all our central banks, including the Bank of Tanzania and Rwanda and Burundi and others, for the focused training courses over the years and the knowledge exchange program that these countries continue to offer and for which South Sudan continues to benefit greatly. In essence, dear governors, fellow delegates, South Sudan joins each of the EAC partner states to mitigate downside risk by keeping monetary policy data dependent, by undertaking supportive policy mix, by implementing growth-promoting structural reforms in an effort to boost regional growth. And in this case, I challenge all of us to endeavor to lift all boats in the region, because by doing so, we all benefited. Finally, fellow governors, dear delegates, many people miss the opportunity to visit South Sudan and Juba simply because of the negative way the media portrays the country, especially in the recent years. But I can submit to you that ever since the parties to the conflict signed a peace agreement in 2018, security has improved greatly, and the parties continue to implement the agreement in the letter and in spirit, leading to the planned general elections in 2024. I therefore would like to reassure all of you that South Sudan is not only peaceful, but is greatly open for business opportunities, and you are all welcome. Honorable Governors, in conclusion, I take this opportunity to appreciate all of you for coming to partake with us in these great functions in Juba, and for all our delegates and all the staff who have spent several nights for the last few days looking and reviewing the work that has been done. And in this case, we are really indebted to the EAC for excellent work that has been done, which is going to be shown later in the documents that are going to come. And in this case, let me just say, Honorable Governors, in conclusion, I encourage all of you and all the delegates to venture out and enjoy the hospitality that South Sudan offers. Thank you very much. Asanteni sana.
Thank you, Governor Dr. James Alich, for those wonderful words. Ladies and gentlemen, please join me in welcoming Dr. Kamau Thogi, Governor of Central Bank of Kenya, to deliver his remarks. You are welcome, sir.
Good morning, everyone. The Honorable James Garang, Governor of the Bank of South Sudan, fellow governors of the EAC central banks, senior central bank officials, distinguished participants, ladies and gentlemen. It's a great pleasure for me to join you in this meeting of the East African Community Monetary Affairs Committee. This is my first Monetary Affairs Committee meeting since I was appointed the Governor of the Central Bank of Kenya. I'm delighted to join this family, and I look forward to working together with other governors of the EAC region to drive the EAC integration agenda. Allow me to take this opportunity at the outset to sincerely thank the Bank of South Sudan for the warm hospitality that has been accorded to us and our delegates, and for the excellent arrangements for hosting this meeting. I would also like to thank the staff of the partner state central banks for the work they have done over the last few days to prepare reports for today's meeting. Ladies and gentlemen, the EAC has grown tremendously over the years with new members, including the DRC and Somalia, joining as the 7th and 8th members, respectively. We welcomed the DRC in July 2022, and subsequently the Federal Republic of Somalia in March of this year. The representation in the Monetary Affairs Committee has also recently changed, and joining me today for the first time in the MAC meeting, our host, Honorable Dr. James Alec Garang, Governor of the Bank of South Sudan, and Honorable Edward Normand Bigedako, Governor of the Bank of the Republic of Burundi. With the new membership, the EAC is now approximately half the size of the common market for Eastern and Southern Africa in terms of land area, population, and the combined GDP. This means that the EAC has emerged as an important vehicle through which we can secure peace and economic prosperity in the wider region of Eastern and also Central Africa. In terms of the economic developments, the EAC region is estimated to have grown by 4.1% in 2023, exceeding the global growth estimate of 3.2% and the sub-Saharan average growth of 3.4%. The outlook for the region is equally impressive, with the EAC growth expected at 5.5% in 2024, which is stronger than the 3.8% that is projected for sub-Saharan Africa and the 3.2% for the global economy. And this positive outlook for the region is supported by strong performance of the services sector, resurgence of agricultural sector performance in some countries. In the case of Kenya, the economy grew by an estimated 5.6% in 2023, which was a recovery from 4.8% the previous year of 2022. The economy is expected to maintain that growth momentum into 2024, and we expect a growth of 5.7%, essentially supported by the services sector, which is quite resilient, but also the recovery in agriculture, as well as the implementation of some of our government measures under the bottom-up economic transformation agenda. The diversified structure of the Kenyan economy has also remained a key source of resilience to domestic as well as external shocks. On overall inflation, which is a key criteria for convergence, our inflation has declined from a peak of 9.6% in October of 2022 to 5% in April of 2024. Of course, this is within the government. In fact, this is the government target. We normally target an inflation of 5% plus or minus 2.5 on either side of the 5%, and certainly meets the IAMO convergence criteria on inflation of 8%. We expect inflation to continue to decline in the near to medium term, largely as a result of easing food prices and the recent tightening of monetary policy. On the monetary policy front, the central bank has been tightening monetary policy to address the inflationary pressures as well as pressures on the exchange rate. And we have raised our central bank rate by 600 basis points from 7% in May of 2022 to 13% in February 2024. And further to enhance monetary policy transmission, the CBK adopted a new monetary policy implementation framework in August of 2023. And this new framework is based on inflation targeting and introduces an interest rate corridor around the central bank rate set at the CBR plus or minus 250 basis points. And consequently, monetary policy operations now aim at ensuring that the interbank rate as the operating target closely tracks the central bank rate. Kenya's current account deficit was estimated at 3.8% of GDP in 2023. This was a narrowing from 5% the previous year, and we are projecting a current account deficit of about 4% in this current year and over the medium term. And we do believe that a current account deficit of about 4% of GDP is, I think, is consistent with a sustainable debt position over the medium term. We do one of the things. First, I think part of what is driving the narrowing of the current account deficit is the performance, particularly of remittances. Our remittances are quite robust. They are a very dependable source of foreign exchange. Every year they have increased. Last year they increased by about 4%, which was actually on the low side. This year, in compiling and estimating our balance of payments for this year, we have assumed a growth of about 5% for remittances. At the end of last year, our remittances amounted to about $4.2 billion. But so this year we have projected a growth of only 5%. But already in the first 3 months of the year, we've seen actually an increase in remittances by about 18%. So even that current account deficit of 4% that we are targeting, we expect to actually perform on the to overperform. The one area, Governor, that maybe just to highlight, which sometimes I look at my friends from Tanzania and also Uganda, and I admire, is really on the area of foreign direct investments. We really try to increase the level of our foreign direct investments. This year we're projecting foreign direct investments in the region of just slightly below $500 million, which in terms of GDP is very small. It's like 0.5%. So you can imagine we have a current account deficit of 4% of GDP, and it's being financed by non-debt creating capital inflows of only about 0.5, meaning that the remaining 3.5 is funded by debt creating inflows. But having said that, we are making a lot of efforts to get foreign direct investments, and I think if we can sustain that 4% of current account to GDP and just raise foreign direct investments by another 1 percentage point of GDP, I think then we'll really have a sustained current account deficit over the medium term. Having said that, that current account is also being financed by portfolio inflows, and I'm happy to note that in April, for the first time in many, many months, we've seen actually a positive net inflows into the Kenyan economy. Before that, we had seen significant outflows, continuous outflows, but we have seen now a reversal of those inflows, and that is serving to strengthen our balance of payments. So we do endeavor to build reserves in line with the YAMU convergence criteria of 4.5 months of import cover of gross reserves. Currently, we have reserve cover of about 3.8 months of import cover. We got lucky the other day. Our shilling appreciated significantly, and we were able to go into the market and mop up a lot of foreign exchange, and that helped us build our international reserves. So, ladies and gentlemen, I commend the EAC partner states for their commitment and efforts aimed at advancing the EAC integration process. Through the MAC, the East African Community Central Banks have so far made significant progress in harmonizing monetary and exchange rate policies and frameworks, harmonization of statistics and financial reporting standards, integrating the financial systems, and harmonizing the national laws and regulatory frameworks. And significant progress has also been made in the area of cross-border payments. Fellow governors, in the last few years, the region has been faced with several shocks that have affected the economic performance and also the policy choices. Therefore, as the EAC grows larger, stronger, and more deeply integrated, the community should continue to build its resilience to multiple shocks arising from global challenges and geopolitical developments. The last MAC meeting took note of world events that occurred since 2019, which threatened to derail the community from its steady growth path. The meeting called for a unified approach to dealing with crises going forward, and I'm happy to note that in-depth discussions have taken place among the various committees of the EAC, including the MAC, the Committee on Fiscal Affairs, and also the Capital Markets, Insurance and Pensions Committee, to strategize on how best the community can handle inevitable future shocks. Indeed, we need to collaborate and coordinate our efforts aimed at stabilizing the region's economies. Let me conclude by reiterating that the Central Bank of Kenya remains committed to the EAC integration process and will continue to fully support the implementation of the governor's decisions. And once again, I extend a very warm welcome to the Central Bank of Somalia and to the community of the EAC Central Banks, and sincerely thank the Bank of South Sudan for their gracious and generous hospitality. And with these few remarks, I thank you all for your attention, and I look forward to fruitful deliberations. Thank you.
Thank you, Governor, for those informative and elaborate remarks. Up next, please join me in welcoming Mr. Edward Norman, Governor, Bank of Republic of Burundi. So welcome, sir.
Thank you. Honorable colleague governors, dear senior officials, members of the MAC subcommittees, distinguished delegates, ladies and gentlemen, all protocol observed, bonjour. Bonjour. Yeah, it is with great honor and privilege that I stand before you today as we gather for the 27th Ordinary Meeting of East African Community Monetary Affairs to review progress made on implementation of the decisions made by the governors during the 26th meeting of Monetary Affairs Committee held last year in Bujumbura, Burundi. First and foremost, I wish to express my gratitude and appreciation to the people of the Republic of South Sudan, and especially to Dr. James Arik Garang, the governor of the Bank of South Sudan, for the warm hospitality extended to myself and my delegates. From the moment we arrived, we have been enveloped by kindness and generosity, making our stay an unforgettable experience. Your efforts, dear Governor, have gone above and beyond ordinary hospitality. They have created memories that we will carry with us for a lifetime. I wish also to acknowledge the remarkable work of the technical committee members who spent valuable 4 days in updating the progress so far achieved in implementing our commitment toward the monetary union objective. Your dedication, expertise, and tireless efforts have been instrumental in shaping the quality of the work. It is worth to note that our community has displayed resilience by recording strong growth, supported by increasing output in various sectors and the continued implementation of policies and reforms geared towards improving private sector and public investment. The inflation has also started to slow down these recent months, thanks to policy actions taken by central banks across partner states, the improvement in agricultural production and moderation in commodity prices in the world market. However, it is important to acknowledge that the economic performance of our region faces various challenges and threats, including notably the current account deficit deterioration, the fiscal deficit widening owing to persistent low domestic resource mobilization and increased spending, the tight global financial conditions that led to a low fiscal space, and the exchange rate pressures, and lastly, climate change effects. During the last year, the Bank of the Republic of Burundi has taken many policy actions to reform the monetary and exchange rate policies. We adopted the policy interest rate as a new monetary policy instrument. Also, the pricing for the standing facilities have been fixed at 2 percentage point margin above the policy rate. The monetary policy has been tightened to control inflation and alleviate pressures at the foreign exchange market. In this regard, the policy interest rate has been increased by 200 basis points. Under FX market reforms, the Central Bank of Burundi has issued a new foreign exchange regulation which eliminates restrictions and provides more liberalization to the foreign exchange market. Dear colleagues, we are currently meeting in a context where the global economy is still affected by the ongoing war in Ukraine and in Middle East, combined with the negative effects of climate change, tightening global financial conditions, and shortage of FX. In such context, we must strengthen the cooperation and the collaboration between ourselves as policy makers to address the community issues and ensure successful achievement of our common objective. I remember yesterday during the discussion with the governor of the Bank of Tanzania, we were talking about the common challenges that we are facing. And I would say the advice that are given to us by the international financial institutions, what we hear is the same message. We have to devaluate. I know probably all the central banks are facing the same. So to me, we have to align our policies. We have to align our points of view. We don't need to be dictated on what we need to do, because I believe that there are many other options. So I'll call upon my colleagues to go beyond what we are doing today and exchange experience and consult so that we can have a common vision, a common point of view on what we have to do to face with these challenges, especially the depreciation of our currency. So as governor, I feel concerned by advancing the prosperity and the well-being of our region, and I look forward to our discussions and collaborations that will shape the future of our community. Together, let us embark on this journey of progress, unity, and resilience. Thank you very much.
Thank you, Governor Edward Norman, for those remarks. We move ahead. Ladies and gentlemen, please join me in welcoming Mr. Emmanuel Tutuba, Governor of Bank of Tanzania, to deliver his remarks. You're welcome, sir.
Thank you very much, MC. Honorable Dr. James Garang, Governor of Bank of South Sudan, and the Chair of MAC for 2024, my fellow governors who are present with us today, and those who have been represented here, Madam Annette, Deputy Secretary General of EAC Secretariat, representatives from IMF, technical officials from EAC, partner states, central bank governors, and the EAC Secretariat, distinguished guests, invited guests, ladies and gentlemen, good morning, all of you. Honorable Chair, my fellow governors, allow me, first of all, to raise my voice to our Almighty God for the gift of life and good health that has granted us, all of us, who have been traveling all along the way, coming here specifically for our 27th MAC meeting here in the good city of Juba in South Sudan. Also, let me take this opportunity to convey our sincere appreciation to EAC Secretariat for successfully organizing this as 27th MAC meeting, and also to the Governor, Dr. James, and the entire team for the good hospitality and the warm welcome that you have accorded me and my delegation from Tanzania, and also my fellow governors since they arrived here in the beautiful city of Juba. I also like to acknowledge the tireless efforts of our technical officials in preparing the report that will be considered in this meeting. As I received the report, I have went through and I have confirmed that a lot of work have been done, because when I attended last MAC in Burundi, we had a roadmap of various interventions, and when I went through, I found that they have actually went through and came up with good strategies, which I think once will be adopted and being implemented in our region will make a remarkable achievement. Their expertise and dedication to work are critical in ensuring that we effectively engage in meaningful discussions and make informed decisions about the future of our economies and the community at large in order to achieve the monetary convergence as we have been aspiring from time to time. Honorable Chair and my fellow governors, we have gathered here today to reflect on the progress achieved towards the harmonization of policies and practices, as well as attaining the macroeconomic convergence criteria for the realization of the EAC Monetary Union by 2031. Certainly, there are still issues outlined in the integration agenda that require requisite solutions. For this, I would like to reaffirm the commitment of the Bank of Tanzania to continue supporting the integration agenda as we have been engaged from time to time. Among others, we are delighted to announce that we were able to adopt the interest-based monetary policy framework in January 2024, and we have seen the progress, because when we adopted it in January, we set the central bank rate to the level of 5.5%, with a flexibility of plus or minus 200 basis points. And in April 2024, we then increased it to 6% in order to align and continue to contain inflation and enhance economic development within our target. And you have seen the way it has worked. It's really remarkable achievement for us. This milestone is in line with the community commitment of the EAC member states to harmonize our monetary policy frameworks. I therefore call upon other partner states to ensure that we abide to the commitments to harmonize the monetary, financial, and the payment systems as we have been doing from different times. Honorable Chair and the dear fellow governors, global shocks have been to a significant level adversely impacted the macroeconomic convergence milestones that have been achieved by our economies in the recent past. Consequently, we have observed the deterioration of fiscal space, elevated debt vulnerabilities, increased inflation levels, and also increased pressures in our local currencies. In addition, structural challenges emanating from devastating impact of climate change have also gained prominence. This has been observed in the recent dry spells as well as floods in our region. We have also been experiencing thunderstorms, a number of resistant diseases, sometimes earthquakes, and the other bad calamities which have, to some extent, lost a livelihood of our people. Therefore, the critical task for our economies is how to design policy strategies considering the explicit need to cope with the challenges implied by global shocks and climate change. This meeting should therefore be part of our joint effort in building resilience through strengthening policy coordination and further deepening integration while nourishing and cementing existing symbiotic relations among the partner states. We should enhance the collaborative efforts in monetary, banking, financial market, and the payment spheres to enable the region to sail through these challenges smoothly. Urgent actions are also needed to support the climate transitioning, including reducing disaster risks and promoting green finance while ensuring sustainable land management, water management, and environmental conservation. I would like also to urge my fellow governors that joint efforts are also needed to address the challenges of exchange rate pressure on the way we have been exercising by reducing the dependence on foreign currency, especially the US dollars in our markets. This can be done through promoting acceptability and usability of local currencies in our markets, particularly by enhancing the usage of our East African payment system. I have been taking note of some statistics through our systems where we have witnessed a number of transactions but are still at the low pace. On a daily basis, when we receive reports from our directorate responsible for payment systems, I have been seeing there is a day when we have no even single transaction of one of the EAC member states. However, I believe on a daily basis there are a number of transactions which are being undertaken through within the region. So I call upon for all of us to continue looking ahead the way we can continue facilitating and using our EAPs to reduce the dollar pressure in our economies. Innovations in payment systems also provide a challenge and opportunities to be embraced. I believe all of you are aware that cyber risks are posing threats to our payment landscape. Therefore, we need to jointly collaborate through sharing of knowledge and skills in mitigating the risks as we consider these new payments schemes. Honorable Chair and my fellow governors, in the interest of time, allow me to highlight our recent macroeconomic development issues, where we have witnessed that our economy has been able to maintain a satisfactory performance despite the global economic shocks. Our GDP in Tanzania is estimated to have grown by 5.1% in 2023, and is also expected to grow by 5.5% in 2024. Inflation has remained low and stable. Of course, we have been able to maintain for 4 consecutive months. Our inflation has remained at 3%, and we are also looking forward, especially during this season, harvest season, based on the food supply, that will be able to contain inflation within the same level. And these are actually within our country and the regional benchmark. Additionally, the external sector continued to face vulnerabilities from global environment, despite the challenges, where the current account deficit that worsened in 2022 and 2023 is now started to narrow, and you have seen, according to our statistics, in as of December 2022, our current account deficit was to the tune of 5.3 billion USD, but we have been able to narrow it. As of March, our current account deficit was at the level of 2.7 billion USD, and we are expecting to continue narrowing in the medium term. Of course, for us, there has been a collaborative effort together with the government, where the government has put in place a dedicated team which coordinates a number of ministries to ensure that all key stakeholders are continuing to promote exports, and at the same time looking forward on the way we can undertake import substitution initiatives, and in doing so we have been able to narrow our current account deficit. Fiscal performance was also satisfactory, with the improvements in revenue correction, which are also streamlined with expenditure. Consequently, the public debt has remained sustainable within the acceptable thresholds. I hope, according to the documents which have been read, there is a matrix which indicates all the current countries based on the level of different parameters or criteria, where we have, for Tanzania, we are graced that we have been able to achieve at least 3 parameters or criteria, and for those which we haven't been able to achieve at this moment, we'll put our efforts to see if we can achieve them in due course. In conclusion, my fellow governors, I thank our host once again for their hospitality and warm welcome. And as we deliberate on the region's economic issues, let us remain steadfast in our commitment to promoting stability, resilience, and prosperity for our nations and citizens. I look forward to participate fruitfully with the engagements and the collaborative actions to navigate through the complexities of the evolving economic landscape in our region. With these remarks, I thank you very much for your attention. Thank you, Chair. Asanteni sana.
Thank you, Governor Emmanuel, for those remarks. We also request executive assistants of the governors to produce a one-page summary of the remarks and also share it with the rapporteur and the EAC Secretariat. As we move on, ladies and gentlemen, please join me in welcoming Dr. Thierry Kalisa, representing Deputy Governor, National Bank of Rwanda, to deliver his remarks. So you're welcome, sir.
Honorable James Ali Garang, Governor of the Bank of South Sudan, Chairperson and host of this 27th MAC meeting, Honorable Governors, EAC Deputy Secretary General, IMF representative, senior officials from respective partner states central banks, ladies and gentlemen. On behalf of the Rwandan delegation, I would like to express my sincere gratitude for the warm hospitality extended to us by the Bank of South Sudan and the people of South Sudan. We commend the organizers for the excellent arrangements of this 27th meeting of the Monetary Affairs Committee. I would also like to acknowledge the tireless efforts of the technical experts of each central bank in crafting these comprehensive reports before us. I can personally attest to their dedication. Their work will be instrumental in our discussions today. Finally, let me recognize the invaluable support provided by the EAC Secretariat, especially in coordinating activities of EAC integration, as well as our partners in advancing our shared goals. Dear governors, as we gather here today to reflect on our regional economic integration, it is important to share our experiences, discuss the global economic challenges, and come up with insights to ensure a better and shared future. As we all know, the global economy has been characterized by successive shocks, as some of the governors spoke about already. High global inflation is one of the consequences. In Rwanda, headline inflation was significantly above our medium-term objective of 5% in the past 2 years. Despite efforts to stabilize prices, inflation remained high, averaging 14% in 2023, following a similar level of 13.9% in 2022. These inflationary pressures stemmed from various sources, including mismatch between global demand and supply in the aftermath of the COVID-19 pandemic, and geopolitical tensions arising from the war in Ukraine in 2022. Additionally, adverse climate change weigh heavily on Rwanda's agricultural production, exacerbating the effect of high global food prices on headline inflation. As a result, the National Bank of Rwanda had to tighten its monetary policy stance by a cumulative 300 basis points over the last 2 years, aiming to curb the second round effect of these shocks. As a result also, inflation is now within our bounds and came back to 4.2% as of March 2024. We expect in the medium term that it remains around this target of 5%. Looking at Rwanda's economy, it has demonstrated a remarkable resilience. Real GDP remained steady at 8.2% in both 2022 and 2023. This growth has been driven by mainly services sector, including tourism, and industry sector, of which construction and manufacturing. While adverse weather conditions impacted our agriculture sector, as I said earlier, we are cautiously optimistic about a rebound in 2024 for this sector due to improved weather and other government initiatives. Nonetheless, the impacts of climate change will continue to pose significant economic risks and uncertainties in the years to come, not only in Rwanda, but in the region and also globally. Therefore, alongside our governments, central banks should integrate climate considerations into our mandates and operations to advance the transition to a sustainable, low-carbon economy and promote the resilience and stability of the financial system in the face of climate-related risks. Honorable governors, on the financial sector front, Rwanda's robust financial sector has played a key role in our economic resilience. All subsectors exhibit sound financial stability. Total assets of the financial sector grew by a significant 20% in 2023, highlighting its dynamism and adaptability. The banking sector has been a leader in this growth, driving it through increased lending to the private sector, operational efficiencies, and return earnings. Pension, insurance, and microfinance sectors have also made significant contributions, showcasing the diversity and strength of Rwanda's financial ecosystem. Amidst these achievements, the National Bank of Rwanda remains steadfast in its commitments to advancing the EAC's economic agenda and fostering regional integration. Rwanda and the NBR in particular recognize the advantages of economic integration and are actively working towards meeting the macroeconomic convergence criteria to pave the way for a smooth transition to a common currency. Putting this into the EAC context, I would like to express my sincere appreciation to you, the governors, for your efforts in enhancing monetary and financial cooperation, which is a step towards establishment of the EAC Monetary Union. However, we should acknowledge that there is still a long way to go to achieve the convergence criteria within the timelines outlined in the roadmap of the YAM. Nonetheless, as we navigate the complexities of the global economic landscape and pursue our shared vision of regional integration, EAC's economic and financial sector performance will continue serving as a beacon of hope and inspiration. With the unwavering commitments and collective dedication to the EAC's agenda, particularly towards establishing a single currency, the central banks have a key role to play in charting a path towards a more integrated, prosperous, and resilient future for all citizens. As I conclude, let me reiterate my gratitude to Governor South Sudan, of Bank of South Sudan and his staff, the people of South Sudan, for such remarkable hospitality. As we continue to work towards our shared goals, I am confident that our collective efforts will lead to meaningful progress. Let us remain committed to cooperation and look forward to the benefits of our collaboration, and that the benefits of our collaboration will undoubtedly bring. Thank you for your attention.
Thank you, Dr. Thierry. We are slightly running behind the schedule, but now we're almost there. Please again, join me in welcoming Dr. Adam Gumi, representing Deputy Governor, Bank of Uganda, to deliver his remarks. You're welcome, sir.
Good morning, everybody. Governor South Sudan, our host, thank you very much for hosting us and welcoming us. And I promise that we are going to revenge when you come to Uganda. Governor Bank of Tanzania, Governor CBK, Governor Bank of Burundi, representative of Bank of Rwanda Governor. I'm here to represent my deputy governor who was unable to attend, partly because we are in Uganda, we are at a critical stage where we are negotiating with IMF for a disbursement under ECF. And they are in town now. And we are, you know, a poor man is always beaten. In our local language, they say, if you are poor, you are beaten, even when someone beating you is seated down. So basically, that's what we are doing. So we want that disbursement badly because our reserves are declining. And there are so many issues that we have to negotiate. So at the last moment, therefore, he had to pull out of coming to Juba. But he sends his regards, and he looks forward, as I said, to one day revenging on you when you come to Uganda. I won't bore you with much since the governors have stolen everything I wanted to say. But so I'm only going to bore you with two things about Uganda. One, before even I go to Uganda, I think we need to congratulate ourselves. If you look at East African community as a whole compared to sub-Saharan African countries, we are doing quite well. However, you know, we are doing well, but not very well as we want to be. So overall, we are doing well. But I think the biggest contribution of this doing well in terms of growth and inflation, etc., is basically because of the policies we have undertaken over the years. Some of these policies are not appreciated, but we have to accept that policies have played a significant role in performance of our region compared to sub-Saharan African region. So overall, I think we need to appreciate the efforts we have put into some of the efforts into regional integration and also country-based policies. I think these have made a tremendous contribution to the growth performance we have seen over the years, and being a shining example in African context, how policies really can transform economies. And I think we attest to that in this region. The second point I want to mention is that I have been to Juba now, this is my third time. I want to say thank you, South Sudan. The last time I was here in 2017, I know how Juba was, and I can also tell you that where we see Juba now is unbelievable for some of us who were here before. So we thank South Sudan for this tremendous transformation you are undertaking, and I think we look forward to enjoying more of this in the coming years. Thank you, South Sudan. Uganda's performance has been good over the years, you know, over 30 or so years. However, of recent, we have been seeing challenges. One of the challenges of now we are seeing is that we have a challenge with building reserves, forex reserves. We know we have to meet macroeconomic convergence criteria for East Africa of 4.5 months of import cover. And so getting dollars from the market and traditional sources, which was budget support, is really becoming very, very difficult. So the question is, and I think also some of our sister countries in the region are facing similar challenges in terms of building reserves. So the question we are grappling with is, how do we get 4.5 months of import cover in forex under the challenging environment, and even the environment that is ahead, seems to be very hostile. So this is really a question that is bothering us in Uganda, and I think we need to learn from some of the countries also that are doing well on this front. The other challenge that I think has been mentioned by several governors is the climate change. Climate change, we used to take climate change as a shock, a temporary shock. So drought comes in for 1 year, then the next year dissipates. But it looks as if climate change is here with us. So if it is a permanent shock, how we do adopt this in monetary policy making? How would you incorporate this into financial sector analysis, stress testing, etc., and how are these simultaneously linked? So that is another big challenge probably that we need to address in the region, as also my colleague, Bank of Rwanda mentioned. The other aspect we are seeing and increasing is that, yes, we are looking forward to innovation and digitalization of the economy, payment system, integration, etc. But these are coming up with significant cyber security risks. You hear the other day we were talking with a commercial bank that was hit by some cyber security issues. And these are using sophisticated artificial intelligence approach. So how do we address this as we do digitalization of our economy and also as we link our payment system? This is a big issue that probably we need to learn from one another and also to address as we enhance the integration, etc. The last aspect, which is a challenge I think also for the region, is about monetary policy. Every time we go after monetary policy meetings, we normally go out in Uganda to interact with the locals. So Uganda has had a low inflation for a period of time, but they always ask us, do you think you people in the central bank we eat inflation? If low inflation, if inflation is low, do you think we eat that low inflation? And these are your grandmother, my grandmother, my mother. I say, you know, you are talking about inflation. What is that animal called inflation, and do we eat it? So the question, and then when we moved from the local community and we started doing analysis, actually we found out that monetary policy can also have distributional impact of income. We discovered that at micro level, once we see if we increase the monetary policy rate, it can have an impact of making the poor more poor and richer more richer, not contributing in a sense. So we found this in using our micro data analysis. So we found that once we tighten monetary policy, high income are not affected. Their interest rates don't move with the policy rate. Mainly so if you interact it with the banking system they are using. But we found out that once the policy rate rises, the low income groups, their rates, the rates on that category, moves almost 100% with the policy rate. So if you increase the policy rate by 200 basis points, the interest charged on low income guys goes exactly by the same magnitude. But for the high income groups, their rates are never affected. So no wonder the local guys were saying, do you think we eat low inflation? So that is a challenge that now we are grappling with, that if monetary policy has that, sort of affects some particular groups, low, small-scale enterprises, low-income earners vis-a-vis the rest, how do we address that distributional effect arising out of monetary policy? This is another policy challenge we think that probably can be looked at in the region as we enhance our monetary policy transmission mechanism. With those few words, thank you all. Thank you, governors. God bless you all. Thank you.
Thank you, Dr. Adam, for those kind and encouraging words. Ladies and gentlemen, as we inch closer to the end of this session, we shall be having a photo session. This is for the governors and probably the head of delegations. We have our protocols here and the cameraman. Our protocols will help our governors here on where the group photo will be taken. These will also be followed by a coffee break for the governors and the head of delegation. The coffee break is on the first floor, and for the rest of delegates, our coffee break is just right here outside. So since we are running behind the time, we'll be back in the next 30 minutes. That is going to be 11:10. So please, let's keep time. We still have so much to do. So thank you so much. Protocols, please.
Yes, I can hear you.
Okay, so we open the floor for the governors to make remarks, questions, and comments on the presentations. But before that, let's give a very warm round of applause to Sebastian for this wonderful presentation.
I'm sorry, I cannot hear you very well. Could you speak closer to the microphone, please?
Can you hear me now?
Yes, I can hear you now. Thank you.
Okay, I say thank you. I have two related questions. One is on China. You indicated that growth in China or recovery in China is faltering. And we know very well that China is, has a huge implication in terms of global demand. And this one you related to real estate factor. What are the other drivers that are leading to the growth reduction that you have just projected for China? Is it only the real estate factor, or are there others? And then
I'm sorry, I'm having a lot of trouble understanding your question.
What is the cause for China recovery faltering?
So the cost of China's recovery, you're saying?
Why is it faltering? Why is it declining?
I'm sorry, I'm having trouble with the connection.
The growth in China, according to your presentation, seems to be declining. What are the factors behind that? Maybe something with audio?
So let me see if I understand your question. Your question is, what is happening with China's recovery?
Sebastian, the governor is stating that one of the factors you have indicated in your presentation is that the real estate is affecting the performance of China. But what are the other drivers apart from the real estate?
What are the underlying ones? I'm sorry.
What are the other drivers of the performance of China apart from the real estate?
I guess.
So that is what we see as one of the main risks to grow in China right now. Of course, the fight against inflation across the world and tighter monetary conditions and the economic fragmentation that is happening right now, where trade restrictions are being imposed. I'm sorry, can you hear me?
There are
Yes,
difficulties.
we can hear you. Continue.
No, I'll just leave the other question. Saying he has difficulties hearing. It's okay.
Okay.
Yeah, thank you.
Yes, Sebastian, we are hearing you.
Okay. So the economic on Chinese growth, but the main risk that we see for economic activity in China is if they continue to have problems with real estate that will dampen consumption and
Just substance, we are coming through.
Can you hear me now? Can you hear me?
Yes, but very faintly.
All right. I want to ask you a question. I'll just make a statement. I think generally I agree with the policy prescriptions, which is obviously to base policy responses on data, and that's what the Central Bank of Kenya has done. We always look at the developments in inflation before we take any measures, and to a certain extent we have also allowed the exchange rate to reflect the market conditions. But what in the specific case of Kenya, what I would say is that we've seen a fairly sustained economic performance. I think we are broadly happy with the thrust of growth. As I said earlier, we grew by 5.6% last year, and this year we expect 5.7%. And most of that is being driven by agriculture, but also services. The one area that we really, and I don't know the experience of other countries, but the one area that is lagging for us is the manufacturing sector. Manufacturing has been growing by, I don't know, 2 to 3% value addition every year, and the share of manufacturing has been declining. Inflation, as I said earlier, we have now back to where our target is, and in a sense we have also stabilized the exchange rate. The risks we see is what's happening in the Middle East. And if you look at Murban oil prices, they've increased from about $72 per barrel to, I think they actually reached up to 92, but have retraced about maybe 86. That concern for us, we see it as also affecting the US, and therefore preventing the US inflation to come down. And we've seen the stickiness in inflation in the US. In fact, if you look at core inflation in the US, it has been stuck at 3.8%, I think, for the last several months. And I think there's a data that was shown there. We've seen the growth in the US economy. The last year was 2.5, and this year now has actually been revised upwards to 2.7. In the WIO projections of January, it was 2.6, but now it's going to 2.7. So it's appears to be a very resilient and very strong economy. So, and at the same time, since inflation is not coming down, we don't see why even the Fed would be rushing to lower interest rates, because the economy is doing very well, the labor market is very strong, and inflation remains high. So for us, there's kind of a frontier economy and trying to access the international capital markets. That obviously concerns us because it means interest rates, even external interest rates, will remain high for longer. And if you try to access the international capital markets, the rates will be very high. So that's really the one risk that we see, both on the inflation side. Obviously, as interest rates stay high, that is also a pressure on the exchange rate.
I cannot hear you.
I'm sorry, I'm not going to repeat. Maybe I can ask you a question after I finish, but I think we're having a problem communicating, and I don't want to repeat. So I think maybe just to conclude is also on the fiscal side. Yeah, I think on the fiscal side, I think one of in the presentation it was indicated that one of the policy responses may be to alleviate the cost of living, to increase cash transfers, and I think that is easier said than done, because already we have very little fiscal space. On the one side, debt service at least for Kenya, debt service payments are very high. Second, our debt levels are fairly high already. We want to reduce the debt levels, and therefore we want to borrow less. So that leaves us really with trying to mobilize tax revenue, and that is also, I mean, we've done a lot, but it's still quite difficult. So generally, I think that's the way we see it from the point of view of Kenya. They are, they're going forward. We have good expectations going forward, but we do see some critical risks. And really, what I would have liked to ask the IMF is this U.S. economy. The U.S. economy, they've been raising interest rates for such a long time, but the economy seems to be gathering strength. Last year, it was revised upwards from 2.1 to 2.5. Now it's been revised, and it would be good to know what is really driving the U.S. economy. Thank you.
Thank you. I agree with you that the risks are mainly coming from the external side, the uncertainty about what will happen with oil prices, and what will happen also with monetary policy across advanced economies. Hi, is someone else in the talking that I cannot hear? Can I speak?
Yes, go ahead. We can hear you.
Okay, thank you. So, those are also where we see the main risks. Now, as you mentioned, the U.S. economy has been having a stronger performance than anyone anticipated. It has absorbed the higher interest rates much better than anyone anticipated, and growth has been very strong. I think part of the reason why growth has been strong is that a lot of the issues coming from the pandemic, a lot of the distortions in terms of supply chains have been being addressed, and that has helped growth. And also some of the inflows of immigrants that have been coming into the country have also been able to supply cheap labor force that has been able to, on the one hand, help reduce inflationary pressure, but on the other, address a lot of the labor shortages that the country was experiencing before. So I think some of these components is what is driving the strong performance in the U.S. economy. We're anticipating, as you saw in our projections, that this year growth is going to remain. And that's why we think that this, any support that side to there's further depreciation of the currency, there's further pressures on the currencies, is going to have to come from the monetary policy side. Ensure that is appropriately tied to prevent the inflation targets, and to also help attract new growth that will reduce FX pressures. And that combined with appropriately tied fiscal position that reduces pressure on the exchange rate, for example, by delaying some capital projects that are heavily import dependent, for example, could help reduce pressures and open some fiscal space to provide support to the most vulnerable. So the important thing would be to take a comprehensive view, a holistic set of policies that addresses the pressures, that maintains flexibility in the exchange rate, and that supports the economy as needed.
Yes, Sebastian, another intervention by the governor here. Can you hear us? Can you hear me?
Yes.
Okay.
Thank you very much, moderator. Yeah, I would like also to extend my appreciation to for the good presentation that has been put forward by Mr. Sebastian. I believe, Sebastian, you hear me?
Yes, I can hear you.
Yeah, thank you very much. Of course, from the presentation, first of all, I wanted just to get more clarification because you are working here in Tanzania. I believe we have been sharing a number of data, but in your presentation you have indicated the size of our reserves, which I believe you have the data, but normal statistics that we have been sharing with you indicates that we are able to suffice our imports of goods and services to around 4.5 months. And now in your data you have shown the coverage was at around 3.9. Maybe I wanted to get more clarification on it, whether you relied on the data that we have been sharing, or if there is anything that we may need to take it on board. But the second issue is on the issue of inflation. Of course, for Tanzania, our inflation has remained within the target, below 5%. And since December, we have been able to contain the inflation to 3%. Of course, we have continued to tighten, and you have been advising us that we should continue tightening more. And of course, we sometimes abiding to your good recommendations, and you have seen that I hope for the 4 consecutive months now, since our inflation is around 3%, means we have even tightened more than the US and the Eurozone. So I don't know the normal range that you'd advise us here, to what extent and maybe to what level do you think could be more appropriate as compared to some challenges, because when you tighten more inflation, there might be some implications in terms of growth. Now I wanted maybe to hear much from your side on that area. Another one, you have also advocated for allowing flexibility. Of course, since you are now in Tanzania, you are aware of some challenges that we are currently facing, including the issue of dollarization, where now most of the people are holding dollars, and they have continued undertaking their transactions by using dollars even for local transactions. And of course, remember last time during the second review mission, when mission chief announced during the communique that we should allow flexibility. I have been engaging with some of the banks, asking that, of course, that IMF announced that there will be more flexibility, but we haven't got much dollars. However, for those who are holding dollars, they are expecting maybe to get more profit. And now, in our statistics, we have seen on daily basis, there are transactions of more than 100 million if you combine person to person and bank to bank, which are actually using the prevailing rates in the market. You know, our shilling has depreciated to more than 10% now, and they have continued to keep those dollars. And I wanted maybe to hear much from your side. If there is these are business people who are transacting by using the normal market rates at the retail market,
to the tune of more than 100 million per day. And if there are only few people who are transacting in the black market, especially for those who don't have maybe enough information to support transactions in the formal market, how should we now continue to allow those flexibilities based on the those people who are trading in the black market? Maybe if we can get more clarification based on your experience in this area, I would be happy to hear from your side as well. Thank you very much, Sebastian, for the presentation, and I hope we'll keep banking on some of the recommendations that you have put in this presentation, and I believe we'll continue supporting our challenges that we are currently facing in terms of dollar liquidity in our economy. Thank you.
So you can hear me?
Yes, I can hear you.
Yeah, I don't know whether I heard you say that should we achieve the inflation targets, and especially in regard to the core inflation, then one can think about lowering interest rates. I just wanted to follow up on that. I'm as close as I can get. Can you hear me now?
Yes, better.
Okay. I was saying I thought I heard you say that should we achieve our inflation target, and in particular the core inflation, then we could start thinking about perhaps lowering interest rates. So following on that, if the U.S. interest rates are going to remain higher for longer, and I think, as you said, we're expecting 3 rate cuts this year, but now it's even possible there may not even be a rate cut. Would it be wise, even if we were to achieve our inflation targets, would it be wise to lower rates, given what happened in the past, even last year when we had the huge, fairly significant gaps between the interest rate, U.S. interest rates and our interest rate, so that interest rate differential led to instability in the foreign exchange market. So that's my question. Even if we achieve the inflation targets, wouldn't it be wise to still maintain high interest rates, given that the U.S. rates would be higher for longer?
I think I understand your question. I think it's important to be forward-looking. So you expect that the interest rates in your main trading partners are going to remain high for longer, and you anticipate that would create pressures in terms of outflows, of financial outflows, and that would create pressures on the exchange rate, and that in turn will result in inflationary pressures. Yes, I think it is wise to have that forward-looking view, and then think, okay, perhaps even if inflation is already at target, perhaps we will need to pause for a while until we see what happens with advanced economies, and then once we have a better view of that, then we can decide whether there's a need to relax. So I think that forward-looking aspect of monetary policy is going to be critical, especially, it always is critical, especially this year with so much uncertainty on where commodity prices are going and where policy rates are going in a I think it's a good way to think about how to formulate policy this year.
More questions or remarks from the governors here? Sebastian, can you hear me?
Yes, I can hear you.
Okay, Sebastian, thank you very much. I think there are no more questions or remarks. Thanks for the presentations, and also we had some hiccups on our communications, but thank you for being back. Let's give last round of applause to Sebastian for his presentations and questions. So Sebastian, thank you so much, and we will proceed with the meeting.
Thank you so much for your time. Thank you, a pleasure to be here.
Thank you.
Bye. Thank you.
Dear delegates, we are moving to the next agenda. We will be having consideration of the reports of the technical officials. You can help us with the reports here. They will be reading through the hard papers, but we will also display the soft copy for the governors to follow.
Thank you very much, MC. Honorable governors, distinguished delegates, I've been given the privilege of taking you through the senior officials report fairly quickly. And given that the 2 hours we were given has now come down to 40 minutes, I will run through this like an East African marathoner so that we still finish in good time. Honorable governors, we have had technical officials meetings since Monday, and the report that we hope the heads of delegations are circulated to you is being displayed. In that report, we have the introductory part is basically recording the formalities of the meeting, how the Bureau was constituted, remarks by the chair of the meeting, that is our host, and remarks by the EAC Secretariat on page 3. And then after that, then we have a record of the recent economic development, which is basically, that is on page 4, which is basically giving us what has happened in terms of growth, in terms of inflation, in terms of current account within the EAC. On page 5, we have simply recorded the recent global development and their potential impact on the EAC, which is basically a reflection of the discussion the governors have just had with the representative of the IMF. The main business of the Monetary Affairs Committee starts on page 6 of the report, which is the status of implementation of the EAC convergence criteria. And here, governors, we are simply highlighting where we are with respect to the convergence criteria, such as the headline inflation, the reserve cover, the ceiling of overall deficit, and public debt to GDP. Now, what we have recorded there, governors, is that there were inflation pressures in 2022 and 2023, but this is now easing off, and the inflation has come back to the band in most of our countries. But of course, we still have an issue with meeting the criteria on public debt and on fiscal deficit in many of our countries. The same page, we are recording the progress on establishment of the East African Monetary Institute. It's a long write-up, honorable governors, from page 6 up to page 9. Now, on that particular one, we had a proposal from the EAC Secretariat where they were thinking of the possibility of having the EAMI established temporarily at the East African Community Secretariat, but the senior officials are of the view that that may not be procedural, amongst other issues that the officials raised, and therefore the recommendation there on page 9 is for this issue to be sent back to the higher levels where it is. So we are only requesting the governors to recommend to the Sectoral Council on Finance and Economic Affairs to urge the council to fast-track identification of the host. The next issue on page 9, number 5, is the creation of Internal Audit Technical Working Group. This is a team that has been working on some regional issues, but they have not been included as part of the structures of the Monetary Affairs Committee, and our internal audit functions were requesting to be given an opportunity to form a group. Now, what the senior officials are requesting the governors to do is to request the internal audit functions in our central banks before this group can be considered to prepare clear draft terms of reference and define how they'll be reporting within the Monetary Affairs Committee. And then governors, number 6 in your report, which starts from page 10 to page 11, is the East African Guidelines on Compilation of Monetary and Financial Statistics. Governors, this matter was presented to the governors in 2003 and in Bujumbura, and at that time there were questions that the team that was working on the guidelines were not able to address adequately, so the governors gave guidance on the work that they need to do. They did the work. They came back to us with the revised guidelines, and we looked at them and we think they are robust enough, they are good for the region, and we are kindly requesting the governors to approve the guidelines. And secondly, we are kindly requesting the governors to allow the team, the working groups, to go and develop a work plan for implementation of the guidelines. That is on page 11, governors. On page 12, the same thing was done with the FSI guidelines, the Financial Soundness Indicators guidelines, and therefore on page 13, having been satisfied that the guidelines are robust enough, we are also requesting that the governors approve those Financial Soundness Indicator guidelines and also allow the team to go and prepare a comprehensive work plan for implementation of those guidelines. Next, governors, on page 13, number 7, is harmonization of reserve requirement regimes in the region. Governors, here we are noting that the countries have done fairly well in trying to move towards this convergence criteria, but given the liquidity situation in some economies in the region, the rates are still fairly high in some, so they are ranging from 4.25 up to 20%. But here, governors, our request is for partner states to continue implementing the necessary reforms to gradually harmonize the statutory reserve requirements by 2026. So there is still a little leeway, about 2 years and a few months for countries to try to move to the required levels. Number 8 on page 14, governors, is on additional operational targets for international reserve adequacy. This had already been approved by governors, and therefore what we are requesting on page 15 is for governors to authorize that the partner state central banks be submitting the quarterly data to the Central Bank of Kenya with a copy to the East African Community Secretariat for compilation, and then we'll be sharing this data with partner state central banks to inform us how robust our reserves are. Now, we are also including there a definition of what we consider stock of short-term debt that will be used in compiling these ratios, governors. Then the same page 15 on emerging issues, there's an issue on cross-border e-payment issues where the subcommittee on financial markets and payment system is recommending establishment of cross-border e-payment dashboard. for the East African community. This will be very useful in giving us very regular and updated information as opposed to the current practice where this information is shared on a quarterly basis and then compiled and then circulated to member countries. So they are requesting that, we are requesting that the East African Secretariat works with our officials and the GIZ, our development partner, to initiate the process of hiring an expert to develop a business case for this cross-border e-payment dashboard governance. Now, those are the issues, including new ones, and in terms of implementation of the decisions the governors had made earlier, those start on page 16. So the governors who were given the latest document on page 16, so they start with the issue of establishment with the East African Monetary Union, and here there was only one particular item where the countries were requested to prepare the medium-term convergence programs, and we are reporting to the governors that some countries have done this. There are countries that are remaining, but they are expected to finalize this as the meeting of Sectoral Council is approaching in 2 weeks' time, where we expect them to table them. So we are requesting the governors just to take note of progress on this. Capital account liberalization, here the assignments that were given to a partner state central bank was done, and we are requesting that given that we have some cases where there may still be a few restrictions, we are requesting that the Bank of Uganda takes the leads in working with partner states to assess the extent of capital account liberalization in member countries. Next is the coordination of fiscal and monetary policies, item number 3. In that item, governors, there is an assignment where we were to develop a framework for coordination of fiscal and monetary policies. Now, here, this assignment we had initially recommended to the governors, and they approved that this be taken up by EAMI. Given the delay, we are kindly requesting the governors to allow the Economic Affairs Committee to work with the Fiscal Affairs Committee, the Committee on Fiscal Affairs, to develop this framework. Then on the next page, page 17, item on, did I leave one? Yes, item number 4, coordination and harmonization of monetary and exchange rate policies during the transition. We are only requesting the governors to take note of the progress made by partner state central banks in the adoption of the price-based monetary policy framework. You could hear from the statements from honorable governors that a lot of progress has actually been made. In the next page, there have been capacity